It started as a dare, not from a friend, but from myself. I'd been scrolling through YouTube one night, half bored and half curious, when I fell into the rabbit hole of $100 to $1,000 stock challenge videos. You know the ones, people claiming they turned pocket change into rent money using simple strategies and free trading apps. Some showed screenshots of massive gains, others crashed and burned spectacularly. I didn't believe half of them, but I wanted to know how far I could get. So I decided to try it myself. Take $100, use only free trading apps, no paid alerts, no premium analytics, and see if I could 10x my money through pure grit, timing, and luck. I knew it was ambitious. Turning $100 into $1,000 in the stock market isn't just difficult, it's borderline ridiculous without leverage. But I wasn't looking for miracles. I wanted to understand what it feels like to chase that kind of goal using the same tools most beginner investors start with. Nothing more than a smartphone and a few tips. Setting the rules. I gave myself 2 weeks. The starting amount was exactly $100 deposited into my Robinhood account. I also downloaded Webull and Public, but I decided to use Robinhood as my main platform since it had instant deposits and no commissions. The only rule was simple. No extra money, no margin, no outside help. Just me, the market, and whatever free data I could access. I could trade stocks, ETFs, or options, though the idea of risking options with such a tiny amount felt like juggling knives. Still, if I wanted to turn $100 into $1,000, I'd need to take risks. Day 1, the hype trap. It started on a Monday morning. The market was buzzing, GameStop GME was trending again, and AMC was showing signs of life. Reddit's Wall Street Bets was full of people shouting round 2 and posting rocket emojis. I told myself I wouldn't get sucked in, but curiosity won. I bought 2 shares of AMC at $4.80 each, spending $9.60, and 1 share of GME at $17.25. That was about 27% of my account gone in one swing. The rest I spread across SoFi, SOFI, and Palantir, PLTR, both cheap, under $10 tech plays that looked like they had short-term potential. By the end of the day, AMC was up 12%, GME up 7%, and my tiny portfolio had climbed to $107.38. Wasn't much, but seeing green numbers gave me a rush. I felt like I was onto something. Day 2, overconfidence is expensive. Tuesday started great. AMC was still climbing, and Palantir opened up 3%. I sold both AMC and GME for a combined $840 profit. Not bad for 24 hours. My balance was $115.78. That's when I made my first mistake. I saw people on TikTok hyping Lucid Motors, LCID, claiming a short squeeze was coming. Without checking much beyond the trending hashtag, I bought 5 shares at $4.95 each, about $24.75 total. By market close, LCID had dropped to $4.55. I lost almost $2 in a few hours. Not catastrophic, but it was a lesson. Free information often comes with a cost. Day 3, the options temptation. By Wednesday, I was relentless. My balance sat at $112.60, and I realized I'd need bigger swings to reach $1,000. That's when I started reading about options trading, the holy grail of high-risk, high-reward investing. Robinhood allowed me to trade options with instant approval, and with $100, I could afford 1 or 2 cheap contracts. I decided to test the waters with $25 on a $13 strike call for SoFi, SOFI, expiring in 3 days. The premium was 25 cents per contract, so I bought one. That contract doubled in value within 3 hours after SoFi jumped 6% midday. I sold it for $50, doubling my money. Suddenly, I was at $137.80, a 37% gain in 3 days. The rush was unreal. I felt like a genius, but underneath that excitement, I could feel a dangerous voice whispering, "You can do it again." Day 4, the crash of reality. Thursday was a reality check. I decided to repeat the same strategy, this time buying a $370 strike call on Tesla, TSLA, for $28 expiring that Friday. Tesla opened at $367, dropped to $362, and my contract lost half its value in an hour. I panicked and sold for $14. In a single trade, half of my previous gains vanished. My portfolio fell back to $123.40. I felt that familiar investor sting, the one where you start second-guessing everything. Still, I didn't want to give up. I used my remaining balance to buy 3 shares of Palantir and 2 of SoFi again, hoping for a rebound. They barely moved. Day 5, desperation trades. Friday morning, I woke up early, determined to make a comeback. I read an article about Rivian, RIVN, releasing new delivery numbers, and analysts seemed optimistic. I bought 1 share at $16.25 and watched it climb to $17.80 by afternoon. I sold it for $17.70, pocketing $145 after fees. It felt silly, celebrating a $1 gain, but it reminded me that progress, no matter how small, was still progress. My balance closed at $125.15. That weekend, I reviewed my trades. After 5 days, I'd made $25.15, a 25% return, which is incredible on paper, but emotionally, I felt like I'd run a marathon. I was checking my phone every 10 minutes, chasing momentum, reading rumors, trying to outguess algorithms that don't sleep. Week 2, going all in. I knew I wouldn't hit $1,000 without a gamble, so for week 2, I decided to go all in on one bold move. I wanted a company volatile enough to swing 20 to 30% in a week, but not total junk. After hours of research and yes, scrolling Reddit again, I landed on Supermicro SMCI, a stock that had been on fire thanks to the AI hardware boom. It was trading at $271 per share, obviously too high for me to buy even one, so I looked at options again. The $280 call expiring that Friday was priced at 35 cents per contract or $35 total. I bought it with 1/3 of my account. For the first 3 days, it barely moved. SMCI bounced between $268 and $273, and my option decayed to $18. Then on Thursday, something happened. The company announced a new partnership with NVIDIA, and the stock exploded to $287. My $35 contract jumped to $110. I sold instantly. That single trade boosted my balance to $197.40, almost double my starting amount. For the first time, $1,000 didn't feel completely impossible. The final push. By Friday morning, greed had fully replaced reason. I thought, if I can double $100 in 2 weeks, maybe I can double it again in one more week. I took my entire $197 and split it into 2 trades. $100 on a $140 call for AMD expiring that Friday, $97 on shares of SoFi, my old reliable friend. AMD spiked early, rising from $137 to $142 by noon. My option went from $1 to $270, and I sold it for $270. SoFi also climbed slightly, bringing my total portfolio to $278.60. That was the high point. By the next Monday, the market dipped. AMD pulled back to $138 and my paper gains shrank to $215. I sold everything and ended the challenge there. The outcome. After 2 weeks, I'd turned $100 into $215.40, a 115% gain. I didn't hit $1,000, but I had doubled my money. It was exhilarating and exhausting. But here's the honest truth. I didn't beat the system. I just got lucky with a couple of volatile moves, and I could have easily lost everything. If Tesla had dropped another $10 a week before, my account might have been wiped out. The challenge taught me that these free trading apps make investing look deceptively easy. The sleek design, the confetti animations, the instant gratification, it all plays into your emotions. I wasn't investing. I was gambling just dressed up in finance language. When you only have $100, you're forced to take big risks because even a 10% gain means just $10. But those same risks can burn you fast. It's a cruel paradox. To grow fast, you must play dangerously, but playing dangerously usually means you lose. What I learned. By the end, I realized that free trading apps are powerful tools. But they also blur the line between investing and entertainment. They make the market feel like a game. And when the stakes are small, it's easy to forget that real money is on the line. I also learned that the thrill of a 100% gain fades quickly, but the stress of losing sticks with you. I spent hours staring at charts, second-guessing decisions, and reacting to every red or green tick. It wasn't healthy, and it wasn't sustainable. If I'd simply bought one share of NVIDIA at the start of the challenge, I'd have made about $12 in the same period. Boring, but effortless. The irony is that the calm, boring route is usually the one that actually builds wealth. Final thoughts. Turning $100 into $1,000 using only free trading apps is technically possible, but it's like trying to win a marathon by sprinting every mile. You might finish fast, or you might collapse halfway through. When I looked back at my trades, I realized that my best moves weren't the lucky ones, they were the moments I didn't panic. Selling AMC when I was ahead, taking profits of the SoFi call early, avoiding margin. Those were the choices that kept me in the game. I ended the challenge with $215, a bit more experience and a lot more humility. The dream of turning $100 into $1,000 isn't impossible, but it demands risk tolerance, discipline, and more than a little luck. If anything, the experiment made me appreciate investing the slow way, because while doubling your money in 2 weeks feels good, keeping it for the next 2 years feels even better. That was all from us today for this video, folks. For more similar content, make sure to check our video on how I let AI pick my stocks for a week. See you in the next one.